that's a hard act to follow. I hope I live up to it. I'm going to share my screen in a moment. I'm Galia Gichon, and I'm really thrilled. There's 15 people on this call, which is amazing, and I know that many more will be watching it on the recording. I do walk the walk, and I would say more importantly, I actually feel like I don't have a choice to invest this way. So, and I invest this way two ways. I'm actually going to be sharing with you about 10 different investments. I own personally half of them, not suggesting you buy them, but as for transparency. And I don't make any money off of anybody buying anything, but just saying that I really do own them for my own portfolio. And I did get to know Janine as an angel investor, and I've continued to do that. I'm actually, again, transparency, I'm in 5 different funds, and they are all either impact or women-led or BIPOC led. And then I have about 15 different individual angel investments, and they're the same. So I don't own anything that doesn't have impact or women-led or BIPOC-led, which to me is one of the ESG standpoints. And I won't look at anything other than that, because we don't have a choice if we want to see change in our environment and our society. And I have 2 daughters that are teenagers, and they're so sick of hearing me talk about it, but I really want the youth to understand that too. That's really important to me. So what I also want you to do today, though, is I'm going to give you lots of different options. I also just want you to get started, because sometimes getting started, if this is something that's important to you, is the hardest part. So get started. I'm going to give you lots of ways that you can start with $100, or if you have more. So I'm giving you really different options. So let's roll up our sleeves. I have about half an hour. Is that correct? Okay, great. So I'll talk fast because I've given you so much information, and you will have access to this presentation afterwards as well. Can everybody see this okay? Okay, so, I thought long and hard. I actually worked on this a lot the last few days, and it's sustainability, it's climate change. There's lots of different ways to look at it. But what I want you to think about also is, by the way, and I just want to acknowledge Janine and what she's doing with Invest for Better. There's not a lot out there for us to learn about women taking charge of our investments and really taking charge of our wealth and our risk at any level. So I commend her greatly for creating this community. So I'm really thankful to be here. Thank you. When you invest, you're buying a day that you don't have to work. And unless you love your work, but you're really creating your financial independence. Just a little bit about me. I was a bond analyst, and Janine gave that great. I also did write a fiction novel. It's a feminist fiction novel last year. And I have a new podcast, which I'm excited about, which is Personal Finance, half an hour. It's funny money. So please check it out. I do it with an actress, and it's produced by a media company from a woman who came from Jimmy Kimmel. So please check that out. Love and Money is our latest. So today we're really just going to talk about why dealing with your money, and we're going to touch upon that for a second because most of you are dealing with your money. And then really I'm going to give you so many ways to look at ESG, which is the focus. And obviously climate change is a big part of it, but there are 3 different components to ESG. And I actually think it's important for us to think about, is there an area that we're more excited about or want to focus on? And as a result, I can find investments that really meet that. And I'll show you how to find that. People often think with ESG, I'm giving up returns. You're not. I found 3 great studies that are just really showing, even since COVID, that you're not giving up returns with ESG investing. And then I'm giving you about 5 different ways that you can start investing ESG or climate change. I just see this over and over, that taking charge of our money, you see more success in your life, personally, professionally, over and over and over. And even with this, especially with this, with impact. So I just want to, and I've worked with thousands of clients, and it's something that I just continuously see. This is something that I got to know with Next Wave. This is the UN SDG goals. And I keep coming back to this. First of all, I love the beauty of this graph, this chart. But I think this is obviously a very specific 17 points. But this is something that if you're starting on the ESG path, if there's an area here that you feel strongly about, we can find you an investment that matches that. So this is, again, very specific, but I love this. And this is not, obviously it's the UN, so it's a little more nonprofit, but as investing for profit, for looking for an ROI, this can be a great way to say, can I find something that's focused on clean water or reduced inequalities or quality education? So personally, I have specific investments. I have an investment in a company called Lesson B, quality education, especially for low-income communities. So this is something that I keep coming back to in my own portfolio, whether through a mutual fund, an ETF, or just my angel investments. So ESG, which is really the main way that we're looking about mostly publicly traded investments, stocks, bonds, mutual funds, ETFs. And I'm going to give you lots of choices in different asset classes. So number one, you want to look at what asset class do I need? But then second of all, which here is my issue? So for me personally, I'm focused on environmental, and I'm also really focused on gender equality, which is going to be more governance, or could be social a little bit. But I find with governance, if I can really have boards and women on boards and companies that are really sponsoring that. So I've actually found a mutual fund that supports that. And then with climate change, like I'm actually really interested in water. So I found a mutual fund that focused on water too. Or we can go more broad. So this is a great first step in saying what's important to me. And that can change also, and you can add more. So here's just the overview is getting started. There's literally mutual fund companies that this is all they do, and they're all amazing. And I'm giving you the list that I love. So you could just go to that mutual fund company and say, I'm going to just invest from their funds. You could go just have a very broad mutual fund, like an index. That's a social index. I have one of those also. And again, I'm giving you examples for each of them. You could go very specific. So you could go for a mutual fund or an ETF that is focused on women's equality or pay equality or racial equality. And I have an ETF for racial equality. Or again, you could do climate change, or you could do food. Like I have the one called vegan, which is a great ETF. Then there's Robo Advisors, which are so great. The millennials are flocking to them. I talked about them in the high school today. And most Robo Advisors have climate change or SRI or ESG components now. I've researched, so I've actually given you a list there. And then lastly, working with fund managers. So this is just if you want your money professionally managed by a person or a specific firm. And I've given you some components there. So these are really actually there's 6 here, the 6 main ways that you can get started or fine tune or add to your ESG investment portfolio. And again, if you have any questions, oh, Ellen. So thank you, Janine. I just saw that. Nice to meet you, Ellen, too. And again, really I'm so appreciative that you're doing this. So these are just 3 things to think about when you're looking at investments. And again, I specifically found these studies related specifically to ESG investing. So there are sustainable funds that actually have lower downside risk in turbulent markets. And these are all from Morgan Stanley and S&P Global, and I can give you the studies to show. So that's number 1. So you're actually not taking on more risk. So you're actually lowering your risk. Second is there were similar returns. And obviously 2004, 2018 was a great market, but there was a down market there too. And then for the first 12 months of COVID, ESG criteria outperformed the broader market. So not only am I doing good for the environment and good for my beliefs, but I'm actually making more money. So isn't that great? So you don't have to give up returns. You don't have to take on more risk. And something that I know, and I didn't have the chance to find, but to me, another benefit of investing with an ESG mutual fund is that a portion, especially with these larger companies that I'll mention, like Pax and Calvert, is that a portion of their money actually goes towards shareholder advocacy, which I think is really, really important to mention. So they will actually use some of their profits to pay for policy change or to have their underlying corporations, because they can do it because they've got a little more oomph behind them in terms of assets. And they can say, here's some things that we'd like you to change with your company as a result. And in addition, because we're getting more and more assets, we can actually say, you can be part of our portfolio, which is something I read about, which I thought was interesting, is they can go to the corporation as well and say, we will have your company in our portfolio if you make these changes. And I've seen that happen. So that was something I read about this weekend that I thought was really interesting. I hadn't thought about it like that. So it's not just like, we want you to make changes, but you know what, we're getting more and more money. So it's another reason for us to be buying these ESG mutual funds and ETFs, because the more money they have, the more power they have to show to the corporations, and the essentially the the large corporations and even the government to some extent and say, you know, we've got a little more power now. So I love that philosophy. Okay, just my disclaimer. And again, I don't get paid on any of these suggestions, but I also don't recommend it. This is my lawyer, unfortunately, is saying that I had to say this. So here's the fun families. I like to put my travel pictures. This is me. This is Belize from 2-3 years ago, right before COVID. These are 5 fund families that I have owned for a really long time, and they're amazing. Calvert, Pax, Domini, Parnassus, Nuveen, and this is pretty much like all they do. All they do is, it used to be SRI, and SRI is what ESG was called, and now it's really more ESG. Domini was founded by a woman, Amy Domini. They're great companies, and I own a Pax fund, I own a Calvert fund, and I own a Parnassus fund. I don't know Domini anymore. You know, I will say you pay a little bit more, but and I'll talk about how you can pay the fees, but it's worth it because again, these companies are really doing the shareholder advocacy and using some of their profits for making change. And they're low minimums. I mean, their expense ratios aren't that high, but it's a great way. So just kind of as how I work, I have all of my investments at Fidelity because it's one of the cheapest brokerage firms out there, but I can buy a Calvert fund or a Pax fund or Parnassus fund at Fidelity. So I still get one statement that has all of my investments, but because Fidelity, you can have Fidelity funds and non-Fidelity funds, I can buy other companies. So I'll buy a Calvert fund, as I mentioned, and I'm giving you some suggestions of funds in a few minutes. But it's all held at Fidelity. So as a result, I can manage my money or do taxes or refinancing a mortgage. Like it still makes my personal finance life efficient and easy. So these are general mutual funds. So these are broad, and I've given you just, you know, lots of different asset classes here. So I would say Vanguard Social Index is probably the most popular. And look, it's not perfect. It's got stocks in there that you might not think should be, but at least it's a start. And so that can be the first place to start. If you just want to get started, you can't go wrong with a Vanguard fund in terms of fees. So the expense ratio is what you're paying in fees. The average in the market for expense ratios is about 1.5%, but I'm pretty cheap when it comes to investing. So I like to keep my expense ratios really under 0.5%. Parnassus, you can see I do own, and I think I actually own all of these. Parnassus and Pax, you can see are a little bit more, but again, they're still under 1%. And the benefit is that I support the companies and what they're doing. So, so you've got large growth. So again, and we're going to talk about that at the very end, fitting it into your asset classes and your asset allocation in your portfolio. So these are large growth. So these are mostly large companies with capitalizations of more than 10 billion, large blend. So MSCI is one of the leading indices. It's Morgan Stanley Capital. The bond one is TICREF. I don't own that one, but TICREF is essentially the pension fund for the teachers, and they're one of the largest asset managers in the country. The PAX is an international one. So I like that one because it's letting you look at international companies. And then allocation is probably one of my favorite funds, especially if you're just getting started. So an allocation fund means it's got stocks and bonds in it in one mutual fund. So it lets you really, if you're just getting started, it's a good first step. Or if you want to diversify and maybe reduce some of your risk, that can be a great suggestion also. So again, I've given you the ticker, you can look them up. One of the things, and I'll talk to you at the end, is I look at the Morningstar ratings. So ideally they're out of 5 stars, and I like to do things mostly that are 4 or 5 stars. Some of these might not be, but it's, you know, mostly it's just another selection criteria. Now, say you want to just go a little more specific. So these are 6 mutual funds and then 3 ETFs. There are so many ETFs. Like I was actually looking through and just kind of, I look through this every few months, and I was just updating my research. It's almost a little bit overwhelming, the ETFs. So I would start that if you want to get more specific. So first of all, these are 5 mutual funds that I love. I think I own all of them. The Women's Leadership Fund. So what they're doing is they're supporting companies that are putting women in boards, which is something that's really, really important to me. And I've actually written the portfolio manager a letter, and I'm like, how many women? Like, can we have more than one? Can we have two? Can we have three? Can we have like 40%? So I've put it out there. She did not get back to me, but I'm pushing the envelope a little bit. The international, the sustainability, water again is something that I feel strongly about, and select energy, select alternative energy. So really looking at that renewable energy. This new alternatives, actually, I don't own, but I researched it and I was like, wow, this is something I want to check out. So those are mutual funds, which to me, mutual funds are a little bit more transparent in terms of really just seeing what they own and what they don't own. So it's a little bit easier as an individual investor to find out that information. I tend to look at all of these funds on morningstar.com. It's free. I don't have a member. I don't pay for it. And so I find that it doesn't matter where the fund is. You can plug in the ticker, which is the 5 letters, look it up on Morningstar, and you can really see the fees, what they own, what their returns have been going back 10 years. So I find that's just a wonderful, wonderful wealth of information. These last 3 are ETFs. I own the first 2. So Justice is run by a woman, Rachel, I'm going to mispronounce, Ruscabati, in California. And it's really focused on racial equality and supporting communities. But again, it's supporting companies that are supporting the communities for racial equality, a lot of low income communities. She's done a phenomenal job there. So that's an ETF that yes, thank you. She's, if nothing else, subscribe to her newsletter. What she's doing in terms of just change from that perspective is very admirable. Vegan is, I admit, I've done really well with vegan. And so that's, I would say I eat personally about 70% vegan, and I really focus on, if I do eat meat, being focused on having it be thoughtful meat sources. So I do have an angel investment in a few plant-based products, but vegan lets me support companies on a larger scale, plant-based, obviously. And then GSFP is a new mutual fund that's run by Goldman Sachs. And what I appreciate is Goldman Sachs has done some really innovative stuff. Like again, I'm going to misquote, but they did a program on like 1,000 entrepreneurs. They're doing a lot of, and they have such heft as a large investment bank. They created Marcus, which is where I do my online savings. So this is a ETF that I have not invested in, but it's on my radar. And I'm just, so this is where I can get more specific. And again, if you want to, this is where I can suggest is that if you want to be more specific, this is where you can think about, well, how can I really do more here? So I have a client recently who wants to look at batteries and really trapping alternative energy in batteries. So there's an ETF for that. So this is where you might just say, what's really important to me in terms of my ESG values? And then it's not that hard to find an ETF. You won't find a mutual fund. Mutual funds are going to be a little bit more broad, but the ETFs is where you can get very specific if there's an area that you want. So Robo Advisors, I mean, this is so huge. And again, this is where I'm seeing the millennials running to putting their money. So what it is with the Robo Advisor is you don't necessarily pick the investments. You just tell them your goals. So you might say, I'm investing for retirement, or I'm investing for 3 years. And that's really where I would focus, is your time frame. And then they will invest your money accordingly. And so they're using AI, artificial intelligence, and they're investing in ETFs. And it's tons of money is going into it. So I love Robo Advisors for a few reasons, is that especially if you don't have any money or you don't have a lot of money to start, it's a great way. And these are companies, Betterment, Wealthfront are kind of the 2 biggest. Ellevest is Sally Krawcheck. So it's focused on women investors. I mean, in a good way, they're not doing anything different, but it's definitely the marketing. This is how they're charging their fees. So again, they're very inexpensive, 0.30 a year, 0.25% a year. And Ellevest, they've different, because they do give a little bit more coaching and hand holding. So it's either $1 a month or $5 or $9 a month. That's the range. So again, very affordable in terms of your total assets. But I have a client who's got, gosh, $2 million, and it's all at Wealthfront. So it's not just it's if you want, you're essentially paying for professional money management at a really, really low fee. But what they're all doing is they all have an ESG, and all of these companies have an ESG and sustainable portfolio. So you can open an account there and say, I only want your ESG and sustainable portfolio. So that's a really great option as well. I love Acorns. I don't know, has anybody here heard of Acorns? It's actually the one app I talked about today with my teens, the high schoolers. So it's a funding account for spare change. So if you're buying Starbucks for $4.50, you're going to round it up. They'll round it to $5, and they'll take that extra 50 cents and invest it, so you don't miss the money. So it's really great if you are just trying to save more money, or if you want to look for a different way to save. But guess what? They've got an ESG and sustainable option too. So they have the money that you would save, they have 9 different investments to choose from. And now they have one of those is sustainability. Again, I don't know what's inside these. I actually tried to research it. And they don't give a lot of information. So I would look at this as comparable to the Vanguard Social Index Fund. It's very broad. And again, I think if you feel very, very passionate about a certain area, this might not be the best choice, but maybe this is your first way to say, I'm going to do some ESG or sustainability investing. And it's not one or the other. You could buy an ETF that's the vegan or climate change, and then you could do this as well. And Ally is a great online savings bank. So it's actually started by all the car companies like GMAC and such. It's been around a long time. So now they have a new robo portfolio with socially responsible sustainability. So last is with fund managers. And there were, I wasn't comfortable necessarily putting somebody's name here because I don't have a personal experience with it. But here's a few things that I did find when I was doing research. Number one is that I'd say, so this is a fund manager. So how they're going to charge you is a management fee, which is usually 1% to 2% of your total portfolio assets under management. Now, in addition, if they're putting it into specific mutual funds, you're actually paying more fees. So just so you understand the fees. So if they're building a portfolio for you of mutual funds, you're paying the mutual fund fee plus their fee. Fees aren't bad, it's just being aware of the fees. What I found, and again, I researched a few professionals, and these were 3, besides the management fee, because I always talk about fees because I'm cheap. But there were 3 things that I found in some of the fund managers that I really liked, that I think if you want to look for professional management. So one is just, do they, I wouldn't want it to be like a financial advisor who happens to also do it. Like there's fund managers that have dedicated people that's all they do. And that's where I would put my money. Like I want someone who's doing this full time. I would also want to understand how are they doing their research. I mean, it's probably not, they can do it themselves unless they're a large company, but then who are they getting their research from? Do you have access to those research reports? And then 3, like I read about this one fund manager who's also doing shareholder advocacy, which I love. So like, let's put your money where your mouth is. You take some of your fees and talk to those corporations or policy change. And again, I found these 3 on some fund managers out there. So these are some questions for you to ask if that's the choice that you decide to do. So where it fits into your portfolio, this is a question in addition. So really and again, this is more for like long-term investing, but there's 4 main asset classes that you want for your portfolio, which is large cap, small cap, international bond. So if you choose to have some of these ETFs, whether it's an index or specific ETFs, you want to make sure it fits into those asset classes. Again, keeping your fees low if you're going to do it yourself, really. And the 2 ways is through low expense ratio and no load. Morningstar stars, if there's a fund, I tend to look at funds that only have 4 or 5 stars. And then just really making sure that the ETF or the fund has been around for at least 3 years. If you have retirement plans, anyway, this is just, I always throw in this slide. So it's good to know, just, can I put it into a retirement plan? And this is the reason I actually wanted to put this in, is that if you are working for a company that has a 401k or 403b and they don't offer a social index or one of the funds, go ask them to put it on. Tell them that you want it in the 401k lineup. Just some podcasts. Obviously, there's my podcast, but these are all other podcasts that I love that have had ones about ESG. And again, these are definitely more female focused, but Planet Money isn't. But then I just end with my affirmations, and especially money affirmations. So surround yourself with positive money people. So again, like more and more, my investing community is impact and change. So literally, I got an email today from this angel investor. She's a fund manager. She's actually here in Greenwich, Connecticut. She's a Black woman. And I said, I was thinking, and she's like, well, I'm really disappointed because in the funds that you guys presented, there's, you haven't had enough people of color. And I was like, you're right. Thank you for bringing that up. And that's something that I'm like, so just putting those people in my financial circle is really important to me. I'm an active participant in my finances. Like I have a friend of mine who's a client also who does have her money managed by a large company in Boston. And because of what we're talking about, she's now going to her fund manager and saying her first step is like, what can you do better? So that can also be a first step for you in terms of climate change and sustainability. Take the change. You're not going to make a mistake. Like make the change. And then by respecting my finances, and especially my mission focused finances, I enrich my relationships.